Hi there traders, welcome to Elite Currency. My name is Chris. This video is all about the euro dollar and pound dollar, taking a look at the reversal perhaps on both pairs for more downside. This is the euro dollar and this is the daily chart. We're looking at pretty strong retracement all the way from 115 up to 118.50, and that is probably the 38.2 fib. I mean, there are many ways where you can put the fib. You could put it on here or here as well, or even probably before that. So roughly, they all add up to this 38.2 fib, and price respecting that and turning back down. So is that basically the reversal for a downtrend, or are we going to continuation basically, or are we going to see a bigger correction? If we do see a break above the 50 fib specifically, which is the last kind of fib level that we would expect for a wave 4, if this is indeed a wave 1, 2, 3, 4, then we would not expect price to break above this 50 fib. That's kind of the max retracement we have in mind. Otherwise, I think something else is going on. Let's zoom out, take a look at the weekly chart, and so far we've of course been looking at 1, 2, 3, 4, 5, and this being an A, B, C back. Now, I might be wrong that this could be ABC. I think that this is still the most likely, but this 5-wave pattern could also be part of a wave C correction, basically, rather than a wave A, what I think. But still, I think that the wave A scenario is the most likely at this point, unless price really starts to drop a lot more, and that this is a wave B. So within wave B, we've been looking at the fact that there could be an ABC correction like this, or sorry, like this, ABC. Now we're in the wave A probably, and within the wave A, it seems like we are 1, 2, 3, 4, 5. So now we're getting that 4. I would expect one more lower low for wave 5, and then an ABC up for wave B, 5 waves down for wave C to finish the bigger wave B like this. All right, so that's what I'm expecting right now. So we're in this potential wave 4 down for wave 5. But if it breaks above the 50 fib, then something else is going on, and probably we already completed a correction to the downside, and we probably going to make a correction up and then a correction down again. So I wouldn't expect that wave 4 and 5 anymore. All right, so what does that mean for lower time frames, like perhaps the 4-hour chart? So basically, what I'm looking for is a bearish breakout below this support zone. We have, I think, pretty interesting support zone with these two purple lines, because there were kind of many touches here and hits around at 117, 117.30 level, 50 level, that basically indicate a support and resistance zone. Here we had support, then it broke, then it became resistance multiple times, as you can see here. So it could become support again, and you can see price reacting to that zone. So a bearish break candle pattern on the 4-hour chart, for instance, like this, right? Strong candle pushing through it, could indicate a bearish breakout. Also this trend line, of course, the support trend line. That's another factor. And when we add the Wiz tool, the Fibonacci sequence levels, to this top, you can see that the most space is expected between 3 and 4, and between 4 and 5, which is where I would expect actually price as the main target for the wave 5. Wave 5 does not have to break the wave 3 bottom by a lot. So the main target is actually just a small break at 114.60. That is the 50 fib of the weekly chart as well. If you put a fib on those 5 waves up, let me show you quickly. Here, if you put a fib from here to here, like this, you have a 50 fib at around 114.60, right? 114.46. So that's another factor and another major level to think about. So that's basically what I think. Here are the major zones for bearish continuation, looking for a candlestick pattern to break through that support, and I think we could have a breakout. Now, what if that does not happen? Or what if price moves down and then bounces up again? So any strong bullish candlestick patterns in this zone is a warning to be cautious, because there could be a bigger correction like this up to the 50 fib, some complex correction like a WXY. It doesn't seem likely at this moment, but it could happen. So that's why we have to be careful of any very impulsive price action here. What we want to see is a break, but then we want to see and maintain bearish momentum. And if we don't see bearish momentum, we want to see correction, small candlesticks that make flags or triangles, and we want to see a break to the downside like this. That's fine, but nothing too aggressive in the upside. Otherwise, we might get that complex correction. What if we don't get the break? So in that case, specifically at this moment, actually, what could happen is that there's maybe a 5-wave pattern being developed. This could be 1, 2, 3, 4. If it goes down for 5, there could actually be an immediate ABC correction. If you see that unfold and you see price turning up in here and moving down again, that could be the start of a wave 3. This being wave 1, 2, and 3. So that could be interesting as well. But that's invalidated if price breaks above this particular bottom, and then that is not a 5-wave, but actually an ABC. In that case, if price breaks above this zone, we might be in a bullish breakout, because of course price is still in a channel to the upside. All right, if we connect the tops and bottoms, you can see still uptrend channel. 3 hits at the bottom, 2 hits at the top. So if it breaks above this resistance confluence, it's not only going above the territory of price 1, it's invalidating the potential head and shoulders level as well. All right, so that pattern is probably not playing out. It's also breaking a resistance trend line and going above probably 118 round level, roughly. So that could be a bullish breakout, and the target of that could be that 50 fib at around 119.60. All right, and there could be maybe a break, wait for a bull flag, in my view, and I would be probably trading that break of the bull flag to the 50 fib. So that would be the upside potential scenario. But the 50 fib would then, in turn, be a very strong resistance spot as well. All right, the pound dollar has made a retracement to the 23.6 fib at around 135. That is a turning spot as well, and price made a good downside fall from there. Now it's at the bottom of this channel, this bear flag, because it's choppy and slow so far. And this bear flag indicates often a continuation to the downside. So if we get a break of that bear flag below the bear flag, we might see a breakout to the downside. And the minus 272 target is, sorry, I'm moving this by accident here. There we go. Is at around 129, 130. All right, that could be the low for the pound dollar for that wave 5 target. But we need to break below the bear flag. All right. Other alternative is that price bounces. We had some indecision last 2 days of last week. So other alternative is it continues, price continues with this channel, this bear flag, and it goes up like this, goes down, goes up, and eventually makes it all the way to the 38.2 fib at 136, which again would be a strong resistance spot, and I would expect bearish candlestick patterns to emerge there 4-hour daily for a bounce to the downside. So with that in mind, because the 23.6 fib is quite shallow, let's take a look. I put the whiz tool at the bottom here, and you can see pretty much a straight move to the third level, bounce off the first, break above the third, retracement to second, right up to fourth, bounce at the third. So if we get a breakout to the upside, like this, and if we get a break above this trend line, we could have a breakout, just like on the euro dollar, to the upside, up to 135.80. Actually, this is looking pretty choppy and corrective, more so than the euro dollar even. So that bullish breakout actually starting to look a little bit more likely in my eyes. But if we get a bearish breakout, we get a good 4-hour candle pushing through this, then that would be a signal, I think, and a trigger for potential wave 5, and the start of wave 5 and the break of that bear flag. But if we get a break above this resistance trend line, yeah, that looks like a good, interesting bullish breakout. You could wait for a bull flag, for instance, pattern like that, and then a continuation up to that 135.80, 136 target zone on the pound dollar. On the hourly chart, I don't see anything else to add, so that's probably about it for the pound and euro. Sign up for, of course, Nanet's free webinars. His Monday recaps are now with Elite Currency, and you can sign up for his webinars on theelitecurrency.com. You have to take a look at the blog, and you'll find an announcement on that, and we'll get a better spot to register for those webinars on our homepage very soon. You can also get free analysis, of course, at theelitecurrency.com, and of course, our free tools and materials and indicators through our ECS Start package. All right? Wish you all good trading and talk to you soon. Cheers.